The layoffs are coming. Be prepared. That means be prepared in your portfolio and be prepared if you are one of those people who are looking at potentially being laid off. Now, you can feel it. You can see the traffic. Look, I'm a moderately small YouTube channel, but I get emails. I don't get them all that much. I mean, I get emails. You can see that people I just got laid off. A spike. A spike sounds ominous. I'm not trying to be ominous, but I'm getting more emails about people being laid off than probably I ever had, and since I've been doing my channel. Now that might be because my channel is bigger than what it was. You can say, look, if you got 72,000 subscribers, inherently you're going to attract more emails than 25,000. Actually, I don't believe that. You can see the traffic on my website is lower from an email perspective. It's very interesting, actually. I mean, it could be somewhere, I don't know, but I'm just knowing that I'm getting more emails about people being laid off. You just kind of feel it. You can just kind of feel it out there too. Maybe again, this is anecdotal, but then I came across this. Amazon cuts 100,000 employees from workforce in a single quarter. Amazon, one of the largest tech employers in the world, not just employers, tech employers. So even a segment of the employers subset is Amazon, has revealed it's now hiring at the slowest pace since 2019. It's cut over 100,000 employees globally in one quarter, likely due to the dramatic slowdown since 2021. The layoffs are a part of an increasing trend of protecting the bottom line within the industry. And here, I'm telling you, man, this is where the industry, the investment. I'm just reading. The cuts likely played a large role in Amazon's recent revenues beat and the rosy profit projections for the third quarter. Though it still lost $2 billion in the second quarter. But here it is. The more employees lose their jobs, the more healthy the company appears to be when shareholders examine quarterly earnings. It is inevitable the layoffs will continue. There have been over 30,000 job cuts by tech companies in the U.S. in the past few months alone, and unemployment claims have climbed to an 8-month high. Did you hear that, though? The more healthy the company, the more employees lose their jobs, the more healthy the company appears to be when shareholders examine quarterly earnings. And this is right out of my lesson. I will never, it must have been 93, 92, 93, something like that. And I was relatively new to the stock market. My mom, and I remember coming back, maybe it's still in the Army, I can't remember. It was the early 90s, I remember that. My mom used to have these value line booklets, which are freaking. If you love statistics, I've always loved statistics in terms of like baseball stats, and I love it, always have, always will. Anyway, the value line was just like a statistic heaven for anyone who's interested in numbers. You just read it, and it's just this huge thing you can get from the library. And I just remember looking, and I was like, "Oh man, GM," because I read Ben Graham. If you could buy stock for less than the value is trading less than its cash, that's a stock to buy. So basically, if a stock has trading at $5 a share and the cash equals $6 a share, that's Ben Graham. That's a value stock that you should buy because the stock, worst case scenario, is trading less than its cash. Anyway, you should read it. It's fun, but it's not like we're the only people who know this. This is the whole thing. I'm a acolyte of Benjamin Graham. All right, well, so isn't everybody else. Anyway, point being is, I remember reading that, and I looked up GM, General Motors, and I said, "Oh man, look, they got tons of cash." And this is really before I knew about debt servicing and all that. But I said they got tons of cash, but it's trading above the price of their cash. All right, so the shares were $10, and their cash per share was $5, something like that. And then all of a sudden, out of nowhere, they're laying all these people off. I said, "Damn, that's going to kill the stock." Boop. Stock shot up, and I said, "What the hell?" My mom told me. She goes, "That." Anytime they lay off people, because labor is the biggest cost to an employer's bottom line. So when you have less people to work, you have less cost, which means you have better revenue, or better, not revenues, better earnings, because earnings are net of expenses. And I'll never forget, I said, well, that doesn't make sense. That's counterintuitive. You're laying off people because you're not growing to the extent that you needed to grow to keep those people on, and the stock price goes up, yep, because less cost. And that's short-term stuff, man. Short term. And that's the first thing I recognize. The stock market is odd, man. It's an odd bird, and makes no sense. Now, what you would say in the long run is that they're basically clearing out they're clearing out to readjust, and that will be beneficial in the long run with new advents of technologies and stuff. I was like, maybe, but that's a risk, man, because what if they're not? What if they're not clearing it out? What if they're just losing business like GE? I think my mom actually just texted me the other day about GE. Let's take a look at GE. Because she literally just texted me about GE. And let me see what she said here. Because GE is popping. And I said, why would GE be popping? Yeah, look at that. Oh, man, GE's, let me just pull this up. I'm having a hard time here. There's a 10-year of GE, and we're going to look over here. That little pop. Now, that might not seem like much for 10 years, but if we go year to date, we go to 3 months. Look at that. So it's popped from 60 up to 75. It's up $15 a share on 60. 15 divided by 60. That's 25%. Literally in 2 weeks' time. Why? And I text my mom and said it's got to be because of military spending, right? I mean, because they ramped up the wars that they want to fight in China, that we're fighting in Ukraine, and then she said, one second. So, but not the reason I chose GE. My investment strategy consists of buying a share of a stock that I like. GE was cheap, and I thought I still own lots of assets if it filed for bankruptcy, so it won't go away empty-handed. Yeah. Better than the lottery, which I never do. Anyways, interesting too, just on a side note, she, one second, I want to show you this. These are tanks going through Elkton, Virginia. And now, I don't know what that's about, but that's odd. Why are all these tanks going on 33 through Elkton, Virginia? I don't know. Anyway, the point being is when layoffs happen, that's not a good sign of a growing economy. So let's see. I remember too, hold on. Facebook was freezing hiring. That was interesting. I think Google did the same. Actually, let's see. Google freezing hiring after employment slowdown announced. The reason that's of interest to me is because my daughter graduated with a degree in computer science from Georgia Tech, and she was saying that a lot of her colleagues or co-graduates, whatever the hell they're called, from tech go automatically to Facebook, Google, Amazon, and make easily over 6 figures right out the gate. And you're just like, well, those days sounds like they're at least coming to a halt, if not an end. Is interesting. So what does that mean? I don't know. But if Facebook, Google, Amazon are hiring and laying off people, and other firms are as well, it's not just tech sector. You know what I'm saying? Something to think about. So this continue. What's the 10-year Treasury doing right now? So let's take a look. Remember, the proxy for interest rates are always and everywhere 10-year Treasury. Man, it's down to 2.588. That's crazy, man. Woo, Nelly. Aren't you glad you didn't rush into refi? Was that 3 point? Look at it, 30 years at 2.9. That's not a sign of a healthy economy. But it just shows you the economy's not in recession because they haven't called it yet. The NBER, those 8 white guys at the end. That's what MSNBC said. Why are we having 8 white guys at the National Bureau of Economic Research? And the 30 years at 2.94. Crazy. Whoa, there's a 10-year 2.588. Yeah, that's not a sign of it. And yet 13-week Treasury bills at 2.3. It's just, look at my Schwab thing. Ooh, there you go, baby. So I bought that guy. It was at 39. Now it's at 42 almost. All right. Anyway, just protect. Defense. All right, see you.